Hello and welcome back to On-Chain Reaction. I'm your host James Bennett, and today we're going to be looking at what's going on with Bitcoin on and off the chain. Okay, so let's jump into it here by looking at the on-chain settlement value for Bitcoin over the last 7 days rolling. We've now dropped below that support we saw a couple of weeks ago at $30 billion a week, down to just $3 billion a day, which is about $21 billion per week. This level was last seen in December of last year, not something we've experienced so far this year. The good news is that price is holding at this level. However, with this decrease in on-chain activity, it is unlikely that we will see that next price move up, and perhaps we may even see a move to the downside. Now, if we're looking at the on-chain volume in native Bitcoin terms, the best metric for that is velocity. Velocity last week, I think I mentioned, hit 360%, which was a sort of a low point seen in 2014 and earlier in the year. And now we've actually gone to a new low, never seen before. Velocity has dropped to its lowest ever level. Here you're looking at velocity in blue, Bitcoin price in gold, and as well as that new low point. What I want to point out here is that the rate of change of velocity, that's the slope of that velocity line, is quite a good leading indicator for the Bitcoin price. As you can see, in the second half of last year, July through till January, or December I should say, last year, velocity was picking up. Subsequently the price followed, and then as velocity fell through the year, prices followed again. So let's see what this next few weeks has in store for us. Okay, so breaking down that traffic into high value traffic, this is the upper quintile of Bitcoin activity that takes place on the network. Here in black, we are looking at the 7-day moving average of high value traffic in Bitcoin terms. Now, what I want to point out here is, again, a never seen before trend on the Bitcoin network, which is that that red dotted line horizontally is 150,000 Bitcoin that are moving in the high value bucket. And you can see each time that we've gone below 150,000 Bitcoin in a week that are moving over the network in that high value bucket, that's where price has shown weakness. That's towards the end of 2018 and also towards the end of 2019. When we have that black line high up above the trend, the red dotted line, you can see that price is in fact recovering or very strong, and right now what we're seeing at the far right hand side is that the number of Bitcoin in that high value bucket is dropping very, very fast, something again we've not seen ever on the network. So high value traffic was a big driver of this recent bull market. Perhaps with it gone, does it mean that it is the end of the bull market? Moving to the supply side, miners' inventories have been consolidating over the last few weeks. I actually showed this slide maybe in January or February earlier this year, and indicating that typically we see these cyclical patterns in miner inventories. In blue you can see the total number of Bitcoin held in inventory, in gold again the Bitcoin price. The green highlighted areas indicate where Bitcoin is in a bull market, and therefore, you can see that at the same time the miners' inventory dropped sharply, those big downtrends, and then during those bear markets, consolidation, flatter inventory line, or perhaps even rising. If we zoom in this next slide on what's happened the last few months, we can see that inventory is in fact building. So we've hit that sort of upward slope, and price is still holding steady. Price there in blue inventory, sorry, in green inventory in blue. How does this translate into the miners rolling inventory? Well, the miners rolling inventory looks at the net inventory position, so that inventory line you just saw, but then also looking at how many coins are being sent out for the first time. So newly generated coins less the newly spent coins gives us our MRI. When MRI is above 100%, there are more coins being spent. If it's below 100%, they're building their inventory. Same sort of picture here. You can see MRI has been trending towards 100% since the beginning of the year, and price has been holding steadily as we've got toward that 100%. So, okay, overall, let's say the network, on-chain network demand is dropping pretty fast. miners are holding their position, but what about fund inflows? This is a really interesting picture that we're looking at here. So in orange, it's the fund inflows less the miner sales. So that's all new investment into the market, less miner sales, which is that new issuance coming into the market. When those two things are balanced, you would expect to see price holding pretty firm, excluding what's happening on the on-chain side, the secondary market. And this is exactly what's been going on over the last few months. You can see that orange line is really trending horizontal at the moment as Bitcoin ranges between $32,000 and $36,000. So if you believe that now Bitcoin is moving or graduating from a network story, perhaps more to a store of value story, that balance between supply and demand, then well, this is one of the very important metrics to watch. Okay, finally, we haven't looked at this picture in a while. We're looking at the total amount of Bitcoin that is sitting on the Ethereum network. Out of the 21 million Bitcoin that will ever be mined, there's about 1.2% of those Bitcoin are now wrapped and on the Ethereum network, either through the wrapped Bitcoin token, Huobi token, or RenBTC. It's about 1.6% of all the active Bitcoin. Remember, a few million of those Bitcoin that have been mined have been lost forever. And so 1.6% of the active, which is a huge amount. That's $8.6 billion worth of Bitcoin that is actually sitting on the Ethereum network. So it could be that a lot of that fall in on-chain activity that we're seeing is actually just a move onto a layer 2. If you think of it, Ethereum like a layer 2 for Bitcoin, that activity perhaps is still taking place, but just not as much on the main chain. Really interesting evolution that we're seeing potentially with Bitcoin at the moment. So on the right hand side, that table, this is a fantastic chart from table from June Analytics. It actually breaks down the some of the biggest holders of those wrapped Bitcoin. So that's just the green portion in that chart on the left. Its biggest three, Alameda Research, have about $2.2 billion worth of Bitcoin wrapped. CoinList 1.3 billion, Grapefruit Trading 0.8 billion. Scanning down the list, you can see a few of those market makers and neobanks, Kyber, Maker, DDEX, and then AirSwap, which I believe is on the Polygon network. So very exciting there to see the real sort of actors in the space who are using these wrapped Bitcoin for market making purposes, and also liquidity in these yield farming protocols. Okay, that's it from me for now. As always, if you have any questions, do reach out at info@bytetree.com. Otherwise, we'll see you next week.